What is going on, traders? Welcome back to the Traveling Trader. Interesting week in the markets as we push up here, taking a look at the S&P 500. You see that we're pushing up on the upper limits of the pandemic recovery. So we'll definitely go over that. I'll do the S&P 500 as well as the Dow Jones analysis. There are some really interesting data points here. And we're definitely at a crossroads, or a moment of truth, I should say. And there are a few reasons for that. Will we continue to go up, or will we trade sideways from here? Will we go back and retest bottoms? I'll go over my analysis on that. Should you sell the rally? If you are a fan of this channel, or if you've been tuned in for a while, you know that I'm a big fan of fading the market. I like to buy during situations like this where we tend to see, outrageous price reactions in the form of crashes or bear markets. And I like to sell the rallies. That is a lot easier said than done, but trust me, that style of trading will suit you better in the long term if you're not FOMOing into these rallies and panic selling as this is going down. Because remember, when you're panic selling as stocks are dying, you're actually selling to somebody else or an institution that's willing to buy up your crumbs. So eventually that's the person that you want to learn to be. So if you've been following the trading community or the trade alerts, you know that we bought most of our stocks during the week of the initial stimulus, which happened to be the current market bottom. Now, obviously we could tank, we could reach those bottoms again. We can go even lower as we did in 2008. I'll go over that in my analysis, but the important thing was we weren't trying to time the market here. It was just a recognizable discount for some of the high quality stock picks. So sell the rally. I'll tell you what stocks I'm looking to sell on this rally. There are definitely things that I picked up that I didn't expect to rally this hard, this fast. So we're talking about things like Lululemon, Home Depot, Nike. I mean, stores aren't even open now. And there are stocks that are at their all-time high. If you take a look at Lululemon, for instance, I mean, it's knocking on its all-time high. Home Depot already reached its all-time high. Nike spiked up past $90 already, right? And these stores aren't even open. They're starting to reopen, this week and last week in certain states, but they're not open yet. So I'll go over what stocks I'm looking to sell the rally on. And this is really important, how to improve the quality of your portfolio, what stocks to buy now. What could you buy now if you missed the dip or you missed the stock market bottom? What stocks could you buy right now that will improve your portfolio? And in short, stick to high quality stocks. The quality of your picks here is very important. If your portfolio is overloaded with cruise lines and airlines and it's disproportionately skewed in that manner, we might want to take a look at that. And I'll also go over a video by one of my favorite analysts. You might know him if you're in tune with the financial world, but Mohammed L. He actually has a really good point on not only, the quality, focusing on the quality of your portfolio, but also on what it would take for us to significantly see higher highs and break out of what is now looking like a parallel channel or a sideways channel. We had this V bottom bounce here, followed by, over a month now, about a month and 2 weeks or a month and a week of this sideways trading, testing the resistance and support of this channel. So I'll go over that. And then lastly, what options plays did we carry out? There was a really lucrative one on Clorox, where Clorox was hitting its all-time high again. And as the market starts to recover, some of these pandemic sympathy plays are losing steam, and Clorox being one of them. And even during, the pandemic, I mean, it was rather volatile, where it would break out to new highs, retest the 21 EMA, sometimes below it. But on my chart, the white line is the 21 EMA, and then rally again. So the 21 EMA, after nearing all-time highs that we saw on this wick here in March 18th, the 21 EMA was a likely retest. So I had a debit put spread on Clorox, which was up 30% as of yesterday. Really easy, low-risk play. And if you're playing the short-term market, these are the types of swings that you want to look at, things that you can leverage based off of what's going on in the news, and then combining the technicals with that as well. And if you want access to the trading group, where I send out all of my plays, all of my trade alerts, the trade signals based off of the plays that I'm doing, options, stocks, crypto, sometimes futures, that link is in the description. Sign up if you want access to that. So let us go over the S&P 500 and Dow Jones analysis real quick. If we take a look at the S&P 500 and the Dow Jones, they're forming very similar patterns. You see this V-shaped recovery, or what's looking like a V-shaped recovery. Obviously, by the time this plays out, we don't know what the extent of it will be by the time we're fully recovered, but you have this V-shaped bottom followed by a sideways channel. Now, this right here is obviously a period of profit taking, indecision, consolidation. There are enough bears to push this down to just the channel support and enough bulls to push it up to resistance. And that's what this continuation represents. And you see the same thing on the S&P, although the S&P one looks like it's slightly increasing, slightly ascending. Now, from a technical perspective, this appears to be the current top, meaning you can play this channel. And obviously there are infinite ways you could do this, whether you're just playing the SPY and you're buying and selling, or you could do this through SPY options, or you're looking at individual stocks during this channel here that move along with the S&P. Another thing you can do is play the volatility, something like the TVIX or the UVIXY, and you can hedge that against your long-term portfolio. So if you have a portfolio of stocks in the way that we do, here's what my portfolio currently looks like: Tesla, Visa, Amazon, Microsoft, Google, Home Depot. And I send out my full portfolio updates on a weekly basis. Again, link is in the description if you want access to the trading group. But most of the stocks that I bought, like I said, were the week of the stimulus. Just so happened to be the stock market bottom. In my view, it was just a recognizable discounted period where I wanted to pick up some of these blue chips. And there are a few non-blue chips in here, like Jets, which is an Airlines ETF that happens to be up double digits now. But if you have a portfolio holding like this and you want to protect it, aside from selling the rallies, you can play something like the VIX or the TVIX, which tends to go up as the stock market goes down, and you can hedge against your portfolio in that way as well. So not only do we have the resistance of this channel, we have this resistance cluster between the 200 and the 100 moving averages here, the green and yellow lines on my chart. The 100's actually falling slightly below the 200, which is a bearish signal. You have the 0.618 and 0.65 fib levels here. These are just fancy Fibonacci numbers, but this right here is called the golden pocket, right? It's basically a moment of truth level, whether we get rejected from here, again, like we have in the past, or we break from it. If we break above it, then that is a very bullish sign for stocks. Now, what is it going to take to break above this? Well, let us take a look at what our good friend Mohammed El Arian from Alliance says.
So, Joe, we are in the third very distinct phase. For the last month, we've basically gone nowhere in terms of the S&P, with a lot more volatility building in the last few weeks. That follows, as you pointed out, early March the 23rd, very sharp fall, and then a partial recovery. And the question now is, how long can we stay in this phase? What we need to break higher, and that's what you're betting on if you think stocks are going to go up, is either a significant improvement in fundamentals, we reopen and we reopen well, or policy actions that are meaningful. The Fed buying a lot more high yield, for example, is a policy action that would be meaningful for stocks. Or third, an improvement in the system. US-China tensions come down. The global economy recovers in a synchronized manner. That's what you were going to talk about, Phil, about how synchronized is the pickup. If you feel confident about one of these three things, yes, this market goes higher.
All right. So this is exactly, this is reflected in the charts as well. Like I said, your analysis, especially in stocks, is going to come from fundamentals as well as technicals. And what he's saying is actually reflected on the chart, right? Because at the end of the day, the chart is just a representation of behavior and psychology as well as sentiment among traders. So he basically said that the three things that he discussed were the fundamentals of reopening. And in my view, to take it a step further, right, we have 25 to 30 million people who lost their jobs. Are those jobs going to come back? Now, most analysts say no, not every one of those jobs is going to come back. So we will potentially have a higher period of unemployment than we saw before the pandemic, right? Some of those people will get their jobs back. Some of the ones that were furloughed will now resume work, but there are potentially 10 million or more jobs that will not be returned to. So what do you do in that case? Also, will the reopening be fumbled in the sense that will we see another outbreak of the pandemic after people start visiting restaurants and Dave & Buster's and movie theaters, et cetera? Will we see, a resurgence of the pandemic. And what will reopening look like? How long will airlines have to leave the middle seat open? Is that indefinite? What will a movie theater reopening look like? Will we have to leave 1 or 2 seats in between each person? So how long will these businesses be operating at half capacity? The second thing he talked about was the Fed buying more high yield debt. I assume he means high yield corporate debt, right? So corporations are selling debt to the Fed in order to fund operations due to the loss from the pandemic. That one, I think the Fed has shown that they're going to continue doing that. And then third are global tensions as well as a global recovery. Is it going to be a collective effort? Is there going to be tension with China? Is there going to be some punishment levied on China because of them not reporting on the pandemic early enough and allowing it to spread? But according to him, these are the 3 important factors that will determine whether we push higher or not. And again, from a technical perspective, we need to break over this resistance cluster here, as well as the 0.65 fib level. And in my view, I just don't see it right now. I think big boy blue chip stocks like Microsoft, Amazon, Google, etc., those have pushed higher. Those, they basically were impervious to the pandemic. They actually reported great earnings. But what about the rest of the stocks? In my view, it just feels a little too early for them to keep pushing higher, especially as, like I said, retailers like Lululemon at all-time highs, Home Depot at all-time highs. And then you have the battered stocks, the cruise lines, the airlines, the movie theaters. I think it's a little too early for this to push up significantly higher. So what do you do about it? Should you sell the rally? And also how to improve the quality of your portfolio, what stocks to buy. Well, if you look at my portfolio, most of them are blue chip stocks, but there are a few things that I'm definitely looking to sell here, or at least put a stop limit on. Lululemon, I definitely want to sell the rally here. Even though long term, I love this stock. I'm still undecided, but I will definitely be setting a stop limit to book profits. Because Lululemon, I'm up, what are we up on Lulu? 28%. So, I definitely don't want to lose those gains just holding for the sake of holding. Home Depot, we are up on Home Depot since we bought 64%. Same thing, dipped a little bit today after slightly negative earnings, but I definitely don't want to lose those gains on Home Depot. There are a few things that I'm willing to hold forever, really. Amazon, I'm definitely holding that. Apple, I'm definitely going to hold that. Starbucks we got in at a great entry, and they're only going to be reopening more stores. Plus, coffee is the most popular drug in the world, and they can largely open. They have a lot of drive-through locations. You could do mobile orders. It doesn't seem to be impeded by some of the limitations of the reopening. Sure, you probably can't use the bathroom in there as often as you'd like, but who wants to do that anyway? Microsoft, I definitely want to hold on to that. Tesla, I'm a little iffy on. I am bullish on Tesla largely, but we are up 80. I think that's the stock that we're up on the most. We're up 80. What was it? 82% on Tesla since we bought, and it is following kind of the market where it's trading in the sideways range. Now, this is good for Tesla because it's never traded in a sideways range after hitting the $800, $900 levels. It hit these peaks before, and then you tend to see it crash. So if it can trade sideways in this range, then it is establishing a new range, and Tesla will continue to be, a $700, $800, $900 stock. In the future, I definitely think Tesla's going over 1,000. So I'm a little iffy on this. If it starts crashing, then I will definitely be thinking about taking short-term profits before jumping back in. Largely, I want to be a holder of Tesla for the long term. So what stocks to buy? Well, if you haven't already bought, again, I would improve the quality of the portfolio, or focus on improving the quality of the portfolio. Stick to things, blue chip stocks that are just reporting record-breaking earnings right now. Stick to the Microsofts. Shopify is a great stock that we've held for a long time, and I actually regrettably sold this. Not really intentionally, just hit my stop limit, but once we dipped back down below 600, I ended up selling, and now we're above 700. I still booked 80% profits on Shopify, but I would have liked to hold this. Disney's one that I would buy on the dip. We are up on Disney now. It is coming up on this 100 moving average, but I do think that we could see another drop in Disney, and I would definitely buy this at a discount. I mean, besides the theme parks that, have reopened in some parts of the world, Disney is obviously one of the largest movie houses in the world, right? I mean, its movies rake in billions of dollars a year, from the Marvel franchise to the Star Wars franchise to just the animated cartoons, as well as sports. Disney owns ESPN, and once those return, then we can see some revenue coming in for Disney in that sector as well. So I'm definitely bullish on Disney long term, but I do think we might see another drop, and I would definitely pick up Disney on the cheap whenever I can. I'm a huge fan of Visa, MasterCard, as well as in terms of banks. I think JP Morgan here is at a major discount for the long term. This is the biggest bank in the US, but definitely a quality stock over the long term. And obviously, you can sprinkle in your portfolio with some of these higher risk industries like cruise lines and airlines. I mean, we're in Jets. Jets is a Airlines ETF, and you could see that it's currently, it jumped up yesterday about 12%. It's up again today about 1.5%. And this was on news that Southwest says that new bookings now outpacing cancellations. So it looks like people are itching to travel, at least according to this article. Now, again, I don't know how long airlines will be operating at half capacity or at quarter capacity. But yeah, I mean, I wouldn't fill up my portfolio with airlines and cruise lines thinking that that's the obvious play. I mean, those might be battered for a very long time. Each airline currently is losing an average of $50 million a day. That's just not sustainable. So, and they're laying off a lot of their staff, even with the planned recovery. So you could definitely sprinkle those in your portfolio, but essentially you want your portfolio, your long-term portfolio, to be filled with quality, high-earning, high-dividend-paying stocks. Now, in terms of what options plays, I mentioned Clorox at the outset. This one was really easy for us to play because Clorox was testing this wick that it saw here on March 18th as it, around the 210, above 210 range. And it looked like it was pulling back because it just hit overbought on the RSI and it started to trend downwards. And like I said, Clorox makes a habit of retesting the 21 EMA. So when I sent out the alert that I sent out was for a put debit spread 207 and a half and 210 expiring June 12th for $1.10. And this yesterday was up 21%. It eventually got up to 30 something before we ended up closing it out early. We have a spread on AMC that's up almost 70%. AMC being the movie theater company. This was a $6, $7 call spread on AMC that we ended up selling after it pumped due to the fake news that Amazon was likely going to buy AMC, which, I think it was the wrong AMC. They were talking about AMC, the network, and not AMC, the theater. We had a Microsoft Iron Condor that we had to close early for profit yesterday. I was hoping to hold it for 100% profit, but Microsoft's stock price is just inching higher and higher. You could see now that it's currently at 185.77, and 185 was the upper limit of that Iron Condor. Looking to open up potentially an Iron Condor on Home Depot now that it dropped a bit today. It looks like there might be a good Iron Condor play at around, let's pull up Home Depot real quick. There might be a good Iron Condor play between, 235 and 245, I would say, on Home Depot. I'll definitely be sending that out in the trade alerts. And then on the SPY, there are definitely, especially because the S&P is in this tight range, there are some lucrative plays that one could do using options on the SPY. I mean, we could either sell something like 85 or 90% probability out of the money SPY options, specifically Iron Condors, especially that it's trading in this tight range. You could definitely leverage this. Remember, trend is your friend until the end. So we want to be exploiting this until it's no longer there. So look out for that in the trade alerts. I'll be sending those out. Anyway, that is it for today's video. If you got anything out of this, leave it a thumbs up. Leave a comment down below in the comment section. Let me know what it is you're playing, or if you have a question on any of these options plays. If you're having trouble trading options or don't even know where to start and would like one-on-one training with me, I take a handful of people every month. For May, I'm completely maxed out. For June, hit me up on the Discord if you want to reserve a spot. Subscribe to the channel. A lot of you watch but aren't subscribed. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.